Hi everyone, today let's talk about how NVIDIA is actually cheaper today than it was yesterday somehow. Then we'll take a look at the debt ceiling negotiations and some key updates here with the Ukraine war. Then we'll get into the Fed futures and the economic data. Then we'll go over Max Payne for tomorrow's expiration. Then we'll get into the charts. Then we'll take a look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day. The markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So let's talk about this NVIDIA earnings one more time here. You can see it was up a bunch today. And this is not a small company. It was already at $750 million going into the day, and now we're up to about $1 trillion in market cap. And what they're saying is the guidance was so good, in fact, that they raised it from $6 to $9.39, meaning that they were trading at a 50 times forward earnings. And now they're actually trading at a 40 times earnings because of the increased guidance. So in terms of valuation, it's gone down a little bit, but the stock is obviously much higher. Of course, this is mostly due to the demand related to AI, and we're still waiting to see if this is going to be real life. Obviously, it's forward guidance, so they have something to base it on, but this seems like a really substantial uptick here for NVIDIA. Moving over to the debt ceiling talks, there was a little bit of progress. They seem to think they have at least a roadmap for an agreement. They said that they're at a sensitive phase and that they're working through the details, but definitely not that negotiations had stalled. The White House also said something positive, saying that we could move forward with bipartisan agreement in a way that protects the hardworking American. Kent Hearn from Oklahoma said he thinks that a deal might be done before the holiday weekend, which is definitely interesting. That means they're a lot closer than what we've been talking about here recently. So if that's true, that could definitely be pretty bullish for markets. The other concern is that we could lose our debt rating, which would make debt cost more money for the government, which honestly might not be such a terrible idea. That way they would stop spending money quite so much. If it was a little bit more expensive, maybe. But it is the government. They might just continue to spend like crazy. Moving over to the Ukraine war, it seems like Russia is pulling out of Bakhmut. This has been a very highly contested spot here for quite a while. Ukraine and Russia have been fighting it out, and it seems like the US is going to get some F-16 fighter jets, and Russia is now pulling out of that area. They've been beaten back a little bit. Putin came out and said that this is a neo-colonial system and that they are infringing on the rights of other sovereign countries, which is fairly interesting considering that's exactly what Russia is doing to Ukraine at this time. The main highlight here is the F-16 fighter jets. We've been talking about these for a little bit now. The US has constantly said that we weren't going to give them quite yet, but now that Ukraine has been a little bit more successful, it seems like we're more likely to give them these F-16s. Moving over to the economic calendar here, GDP came in higher than expectations, jobless claims lower than expectations, pending home sales lower than expectations, 7-year note a little bit higher here, and reserve balances with the Federal Reserve actually came in a little lower than expectations, but still quite high here at $3.25 trillion. Moving over to tomorrow here, you can see core durable goods, core PCE, durable goods headline here, headline PCE, lots of big data coming out at 8:30 Eastern tomorrow. We also have Michigan consumer expectations and consumer sentiment at 10 o'clock, which will be fairly interesting. Looking at Fed futures here, you can see we've moved significantly closer here to a 50-50 split for a hike in June, which is interesting. We were at 71% yesterday, and now we're at 51.8%. GDP numbers push these a lot closer together. PCE tomorrow will also have an effect on this. So basically at 50-50 here now on another hike in June, which is interesting. Looking down to November now, we have the highest probability being at current levels. So no longer expecting that cut from current levels. Could certainly still expect a cut if we do get a hike in June. That would be interesting. And then looking at December now, you can see it's just about split between current levels and one cut from current levels. Moving over to Max Payne here, not much has changed, but you can see how high these 405 and 410 levels are. 420 seems like a very interesting level, considering that would make all these puts expire worthless. 417, 418 also very interesting, where most of these puts and most of these calls would expire worthless. But like I said, 419, 420 does make sense as well. Put call ratio just under 2, down a little bit. An amount of options at 1.38 million. Moving over to the charts, starting with the S&Ps here on the hour and the 12-hour, you can see we rallied up into that resistance based on NVIDIA, We're still below it here at 414.69, so you could certainly look for a bearish trade off of that level. If it breaks early in tomorrow's session with some of the economic data, then I'd be looking up to 418.12. Otherwise, if we hold below this level, I would be looking to short down to that 410.54 level, which clearly was respected on that down move here previously. We've been watching that one for a while. And if that breaks down here, you can see that 405.29 level. Remember, we talked about 418 being a very interesting level for Max Payne, so definitely something to watch here. And it wouldn't surprise me if we went a little bit higher in tomorrow's session for the close. Moving over to the NASDAQ here, you can see very different. We took out these previous highs. We're now testing this 339.59 level. We get below that, similar thesis down to 337.95. You also have VWAP here on the hourly chart that you would end up getting below, which could certainly signal a little bit more downward price action tomorrow. Again, that economic data in the morning is very interesting. You can see RSI and momentum here on the hourly chart starting to roll over a little bit, which is interesting. Clear divergence on daily RSI, but crazy chart here. Big gap down, doji, big gap up, doji. And if we fail from here, that honestly would be very bearish in my opinion. Moving over to the Dow and the Russell here, you can see the Russell move down once again. We're below this 174.38 level. That's now resistance. Let's go ahead and add a level at this previous low. So 172.22. We're now in this range, just about $2 wide. If that breaks down, watching 170.35 at these previous lows, but certainly could jump around in this area for a while. Momentum starting to tick towards bullish, a little bit of volume on the day, fairly interesting. Dow, on the other hand, hit resistance, still holding above 325.72. And now we're in this range, 329.40 to the upside. If that breaks, there's actually quite a bit of room here to 322.20. So a fair amount of space if this level breaks. Does seem like it's finding a little bit of support from this zone. Momentum is moving towards bullish. RSI still very bearish, but did tick up on volume a little bit. Kind of similar to the Russell, honestly. Moving over to Apple and Tesla on the 4-hour, these actually look quite bearish to me, to be honest. We broke down these levels, found support at horizontal support that we talked about. We now retested that trend line and we're starting to sell off from here. Momentum is still ticking towards bullish, which is interesting. But to me, this looks like a break, retest, and potential continuation to the downside. Tesla showing a similar thing, breakout, break back down, find some support, retest, breaking back down below that trend line. And this looks now to me like we might retest 177.70. You have a little bit of a midpoint. You have a high, lower high setup. And if this breaks down here tomorrow, when we get below this level, you could see support potentially at 172.92 or 167.34. So bearish momentum, bearish RSI, both of these looking kind of weak going into tomorrow's session. Moving over to Roku and Google, you can see Roku selling off once again today. We wicked that high in the after hours at the 200 SMA on the 4-hour, sold off quite dramatically, took out this midpoint here. So now you kind of have a double top type setup with the breakdown, looks much weaker, bearish momentum. This rally might be a little bit over. Maybe we see this come in, set up a higher low versus this low. That would be interesting. Start wedge it out and break out. Certainly a possibility, but watching for either a retest of this area now or a higher low setup. Moving over to Google, on the other hand, you can see that lower high setting up, pulling back from that zone. If this falls tomorrow and takes out this midpoint down to maybe the 55 EMA here at 118.92, that would be interesting. That would also be very close to these previous highs. We also have a level down here at 116.73, fairly interesting. But Alphabet, again, looking a little bit weaker, coming off of that boost from AI in the after hours yesterday. Moving over to Broadcom and NVIDIA, the two chip stocks. This is the weekly chart here on Broadcom, taking out its all-time highs, going much higher here. Very, very powerful move up. NVIDIA, on the other hand, marking these highs and kind of held in this zone, sold off a little bit, but still holding up here. We talked about this actually being a little bit cheaper here today than it was yesterday, even with the up move. So I wouldn't necessarily think this is going to pull back tomorrow or anything like that. But I don't necessarily that it's going to continue to rocket higher like it has been over the last several months. Moving over to Lulu and Amazon, you can see Lulu falling off a cliff here, starting to fill this giant gap that it had on earnings. Very interesting, getting to oversold conditions here on the daily chart. You wouldn't expect this to stop until we hit the 144 down here at 337.17. Could certainly come all the way down here to 324, 325. That would be interesting. but just wanted to let you know this is cratering right now. Moving over to Amazon, you can see similar to Google here, we have a lower high setting up. Still a bullish trend. We're now between the 9 and 21 EMAs and above trend support, but below VWAP. Momentum is bearish, RSI ticking lower. Like I said, very similar to Google, and it does seem like this might be setting up for a little bit of a pullback, maybe down to the 55 EMA, right around 109. Moving over to staples and discretionary. Staples continues to waterfall off. Very, very dangerous here if you're trying to trade this. 72.50 is my next level. If that breaks down, we're watching these next lows down around 71. Pretty big move here. Very interesting on staples. Discretionary also breaking down here a little bit, testing that next trend support. You also have VWAP down at 147.84. If this area holds, we can get back above 148.89. If it does not hold, then 147 would be my next level that I'm watching. At this point, this looks like a lower high compared to this high going back to February now. And if that is the case, you should expect this to pull back a little bit deeper down to probably 143.03 in these previous lows. And if this ends up breaking down through that area, and this is more of a lower high setup that takes out this midpoint here, that could be quite dangerous here on discretionary. Moving over to energy and oil and gas. These have been quite bullish, but they both pulled back a little bit here today, which is interesting. Came back and retested the trend line here on oil and gas. If it's going to hold, you would want to see this continue the rally into tomorrow's session, take out this previous high and start to rally up 135.07. That would be interesting. Energy, on the other hand, similar thesis, 78.47. Tested that level. You want to see it hold and continue up here to take out this neckline around 81 and push back up to 83.55. Overall, still holding this base and could certainly go higher, but we did get a little bit of a step down on momentum. Moving over to transports, you can see we found a little bit of a bounce from that level that we were watching, got above this trend line as well, rallied into this mid zone, looking to potentially fill the gap up to 126.09. That would be interesting. If it breaks down from there and starts to set up a lower high, this could ultimately turn more bearish. But right now we're back into the middle of this zone, and it does look kind of bullish going into tomorrow's session. Moving over to bonds here, the 2-year and the 10-year. You can see these have both rocketed up here today on GDP numbers, setting new highs here again today. Certainly looks like it's going higher. 10-year potentially going up to that 4 range. 2-year pushing above 450, potentially looking back up to that 5 range. And that would be very interesting in my opinion. It's surprising to see how high these are going, with equities continuing to stay quite high, really propped up by that AI play, but yields going much higher and stocks still staying high. Moving over to 50 and 200-day averages, you can see that big pin bar to the downside, definitely interesting. 200 hit these previous lows. If we see further breakdowns here, that's going to be quite bearish. We already know that this rally is quite narrow, with those biggest stocks and AI stocks making pretty much all the gains here. This is really displaying what that looks like. You can see how low the breadth is on the 200, down at 37% of stocks in the S&P 500. Above their 200-day average. Very, very low for a rally. On the 50-day, similar thesis, we're down at the 50 level, but like we saw today, S&P is again going higher. Moving over to the dollar, you can see it's taking off once again, getting very close to that next level, 104.41. Above that, I have 105.50. Yields going up, dollar going up, makes sense. GDP numbers were good. US economy still quite strong. And you can see that on display here. Momentum still very bullish. RSI on the 12-hour quite bullish. RSI on the hourly chart, potentially looking for a shorter term pullback, maybe down to the 55 EMA, but overall still a very strong bull trend. Moving over to JNK and TLT, you can see both of these moving lower today. Not by much, but a little bit. Momentum still bearish. RSI on both still bearish. TLT watching this level very closely. Junk also in a pretty critical zone, watching that 89 level. If we get back into that area and start to break down, that would be quite bearish in my opinion. At this point, it does look more like that head and shoulder setup that we've talked about. Left shoulder, head, right shoulder starting to roll off. We've talked about sickness in the markets, but with everything being propped up by these mega caps, I don't know if we're going to see that same kind of sell-off that we saw last year. Moving over to the bond volatility and S&P volatility here, you can see bond volatility breaking out above this trend line, hitting that 55 EMA, This looks very interesting here now. If this starts to push up much higher and we see the VIX continuing to hold in the zone, that would be a pretty good indicator that we're probably going higher here. We're right at this trend line, inside candle, which is generally not what you would want to see. Certainly could be an area for a pullback. Maybe we pull back and hit that 1850 level and then bounce from that zone up to 2250, potentially waiting for that Monday session before we get the decent breakdown. Or maybe the economic data in the morning starts to push us lower. Either way, interesting zone here on the VIX and a breakout on the MOVE index. Moving over to my accounts, you can see I was down a lot on the day. We expected that. We knew that the NVIDIA rally was going to squeeze some of my NASDAQ positions, and sure enough, it did here. And we can see here I have a 334 and 335 call. I'll try to continue to roll these up and out and see if we can roll out of this position. I just want to give this a go. I also think that some of the indicators on the markets right now are showing that we might see a little bit of a pullback, and this should give me some protection to the downside. I also have some puts here for tomorrow, 337, 336, and 335. 335 is already in most of a profit already. Probably should have taken those off, but we'll see how it plays out tomorrow here. I also have this one XOP position down a little bit. Looking to buy the stock here at 123.50, so it's actually only down about 75 cents. And I have that 57-cent credit here. So I'll be watching this tomorrow. I do think we'll probably get a little bit of a bounce in the XOP, but I'll be watching it tomorrow to see what we need to do with that position. Otherwise, still neutral here at the highs, waiting to see if we get a little bit of a pullback or if we continue to break out here. But like I said before, I think the data in the morning is going to determine that direction. Let me know in the comment section what you thought of the NVIDIA update or the update to the debt crisis. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.